Hi everybody, it's Russell Markham here from VectorVest. My apologies on 30 July, the live webcast that we ran, for some reason the screen froze. So anyway, we'll make sure we've optimized the live broadcasting software so that doesn't happen again. But nonetheless, I'm now doing the recording because I don't want you to miss out on anything. All right, so before we get going, please note here, I'll just move myself out the way. Our general license numbers. In addition, general advice only. We cannot take into account your personal financial circumstances. Please speak to a financial advisor for personal advice. As always, past performance is no guarantee of future results. So what I'm going to do today is I'm just going to move this toolbar. You don't see it on my screen there. What I want to do here is I want to talk about the importance of earnings today. EPS. I'm going to put on a stock here to demonstrate. We all know BHP. And I'll just put on our proprietary earnings per share. Now this EPS, I'll just make it jump out a bit more. I believe it's worth the subscription price to VectorVest alone. It's a 12-month leading forecast on earnings. And to demonstrate here, you can see over the last 12 months, BHP's pretty much had falling earnings. All right, so they're the earnings. It's been falling for quite some time. Earnings fall, share price falls on average. Okay, so falling earnings, falling share price. Now, it hasn't always been that way. So just to be clear, it takes into account historic, current, and forecasted earnings. You want to buy into companies where the earnings are rising, not falling. Rising earnings, rising share price. Falling earnings, falling share price. It's as simple as that. Now, if we go back in time, let's go back quite a few years. I put in a couple of extra lines in here. So you can see here, look, earnings took off. Look at the earnings. Earnings are going up. When earnings went up, surprise, surprise, share price went up for BHP. And it doesn't matter where you are in the world, what stock you're looking at, the same principles apply. And so let me demonstrate here. If I were to go to America, all right, so I'm in the VectorVest US system here. And what I'll do here is I'll go to a graph and I'll put in NVIDIA. We all know NVIDIA, NVDA, all right, NVIDIA. It's been booming up in price in recent times. Let's turn all this off, take off all the functionality, keep it really simple. All I'm going to do is put on EPS, change style, make it jump out. Let's make it an area graph, easier to see. Here we go, and I'll pull this back over time. All right, so here we go. Here's NVIDIA. Look at this. Look how earnings over here. Earnings really rocket up. Look at the share price. It hasn't always been that way, because if I pull it back over time, you'll see here for a long period of time your earnings went flat. This was back in 2011. So it hasn't always been that superstar type stock. Earnings kind of just drifted sideways and investors got a bit impatient and it fell in price. If you go back historically a bit more over time, let's see here earnings take off, share price takes off. But the almighty NVIDIA has had times where earnings there just kind of went sideways and fell and share price went down. Okay, so it doesn't matter what stock you look at. You've got to make sure that the earnings are rising. And so Microsoft, right? Microsoft Corporation, another superb superstar type stock. It's done incredibly well in recent years. But it hasn't always been that way. You know, their earnings take off. So you can see earnings taking off here. Up it goes, and up goes the share price. Superb, phenomenal. All right. But if you go back in time, I was having a look at, even the almighty Microsoft stock over here, and I have to pull it back a fair bit in time. It's been an absolute stellar performer. But even the almighty Microsoft share price here, there was a period of time, if I clear this one here, earnings fell. And so here, the earnings kind of sort of went flat, and then they rolled over and went down, and down went the share price. It's a bit difficult to find this, and this is during the global financial crisis. It's difficult to find it with Microsoft because it's been such a superb earnings profile. But even the almighty Microsoft stock has done that on one or two occasions. Okay, so here's BHP, earnings take off, share price goes up. Earnings falls, share price falls. Okay, so you see that correlation time and time again. So I got thinking, I thought, well, let's go and build some top earnings stocks today. Let's go and identify a handful to see what the overall portfolio would look like. And so to do that, we have this incredibly powerful tool called Unisearch, very easy to use. All right, so this tool called Unisearch, it ranks, screens, and sorts stocks for criteria of your choosing. And so my criteria of choice today is going to be the earnings profile. So I'm going to come in here, I'm going to go stocks, capital appreciation, EPS, so earnings. All right, so if you take out a trial of VectorVest, you can do all this. It's really easy to do once you've practiced once or twice. So I'm going to say earnings, I'm going to say delta, so I'm looking for a change. So what change am I looking for? I'm going to say over the last, let's see, weeks, I'll say the last 52 weeks, I want an earnings profile. I want earnings to have increased by 30% or more. How about that? And I don't want stocks that are penny stocks. So I'll set the price greater than or equal to $2. I'll make sure there's plenty of liquidity. So stocks, price volume over the last 50 days. I'll make sure that the stocks have done at least 100,000 trades a day or more. That's shares that have been bought or sold. All right, so 100,000 trades or more over a day on average. And what I'll do here is I'll, just for good measure, I'll say, well, although earnings would have gone up 30% over the last 52 weeks, I just want to make sure that those earnings are still currently going up in more recent times. So I'll come into here, I'll go earnings and greater than or equal to, oh, actually no, we'll do delta. And over the last, let's say 3 weeks, let's just make sure currently that those earnings are going up. So I'll say gone up at least 5% in the last 3 weeks. Will we find shares that meet this? Well, let's find out. Ooh, look, plenty of shares that are meeting their criteria. Now, again, don't get overly caught up with all the other parameters here. I'll just pull this out of the way for now and move this across. This is what I'm concentrating on. I'm wanting to make sure that over the last 52 weeks, the earnings have gone up. Over the last 3 weeks, the earnings have gone up. So these two here are, actually I can't move that one out. These two here are really important. I want to make sure that I've got good volume on average, yes. And I want to make sure that I'm not dealing with any penny stocks. Okay, so let's take these stocks, the top 10, and let's add them. I'm going to put them into a watch list. Now, I've set one up already before, and again, if you take it a trial, if you're a subscriber, you know how to do all this. Once you've watched the how-to videos, I don't want to get caught up with just basic functionality today as such. Although you might be looking at it for the first time saying, well, hang on, how do I do that? Don't worry. Once you watch the training videos, it's really easy to do. What I want to spend my time on today with you here is just to identify those top earning companies. And so what I'm going to do here is I'm going to go through each one of these stocks. Although it's met the initial screening criteria, I just need to make sure it continues to stand out. So we've looked at this one in the past, and I've drawn in the lines here. You can see how the price is going up, earnings are going up, and no surprises to see it doing really well. Okay, so look at that one. It jumps out. So that, yes, certainly would stay on my list. This one here, earnings just started to tick up again, and up goes the price. That looks pretty good to me. All right, you can see I've been looking at a lot of these. Look at NEM, Newmont Corp, brilliant earnings. Up goes the share price. This one here, I'm not too sure. The earnings are not above, they've just gone to zero. They've gone from a negative and they're turning around. So if you're more conservative, you might say, well, no, I want those earnings to be, above zero and rising. So for this one here, I'm going to say, although it looks superb, the earnings are turning around. I just want positive earnings. All right, so I've taken out Catapult there. Let's keep going. What else? So I'm looking for any stocks here where, it might be, I'm not too sure. Now, a few of you might say, well, there's not enough information. Whoop, I'll close it out. Not enough information here. You've only got 1 year, 9 months. And a few of you might say, well, that's more than enough because look, that you've got nearly 2 years and earnings are going up. So you've got to make the choice. I really like the big uplift in the earnings, but I don't like the fact the price has been falling recently. So I'll come out here, DVP, I might take that one out. Okay, so I'll take that one out. So let's keep going. And I'll just graph the remaining ones here. So we're just running our eye, and I'll just jot them down to be quick, to do this more quickly. Yes, Mac is earnings going up, price going up, but it's been a bit sort of up and down, far too volatile, so I'll take that one out. I'm not really convinced with REIT here, although earnings have shot up, price has barely moved. So I'm going to jot that one down and take that one out. REIT, it's got to really jump out. Look at that, Temple and Webster, brilliant. Up go the earnings, up goes the share price. That's textbook. All right, this one, yeah, a bit sort of up and down. I mean, earnings come up, price has gone up, but it's been very volatile. I mean, over a longer time period, you might argue, so hang on, you're being a bit unfair. The earnings have certainly rocketed up, and so has the share price. So, you be the judge. I'll leave it in for now, but I'm not. In fact, you know what, I'll take it out because I just don't like the fact that the price is falling currently. Okay, so you've got to be picky and fussy because it's your money. Here, share price is going up, earnings are going up, but it has been a little bit sort of volatile. So that one here, despite meeting the strict criteria that we initially set up, remember the uni search, despite that strict criteria, we're now working our way through it just to make sure that everything stacks up. So Mac, REIT didn't stack up. Temple Webster looked superb. Zero was a bit sort of up and down, and this one as well. So we'll take these out. Now again, repeat the exercise on uni search. Instead of returning the top 10, return, say, the top 20 or whatever it might be, and again, run your analysis, pull it into a watch list, and refine it further. Now, for today's exercise, I've just got it down to 4. All right, and you can get more and more. You get the idea in terms of the methodology. So these 4 here now meet that criteria. All 4 of these, the earnings are going up, the share price is going up, and so I'll just clear the drawings so you can see. There we are. All right, let's do this. Clear the drawings. All right, doing what I want. So, and it's not just doing this for Australia. You could do it for America, Canada, or Europe. We offer the analysis in those countries as well. And so all 4 of these look like they're stacking up. I'm going to look at the average. So come down here and look at the average. And so this is the average of those 4. So pull it back just a bit. Is that doing what I want it to do? Superb. Yeah. There we are. Earnings are rocketing up and the share price is going up. So this to me looks like a pretty decent set of companies here from a earnings perspective. Right, earnings going up, share prices are going up, and that's all there is to it. If you can build those companies that have, build up a portfolio of companies that have rising earnings, then you're going to get rising share prices. And so we've got a bit more time here. So what I'll do is I'll jump back to UniSearch, and let's see how far did we get down to. We looked at the top 10. All right, so if I run the search, here's the top 10. So we got to DJW. Let's go to the top 20. All right, so we'll keep going just a little bit more. All right, so here we are. Here's the remaining ones. Now you can see 1, 2, 3, 4, 5, 6, only 6 more. So only 16 stocks in Australia met this criteria. And so let's just have a look at the remaining 6 that we didn't look at. And let's just see if we can jot ones that jump out. Wow. Regis Healthcare. Yep, it jumps out. I would have liked this earnings profile to be a bit better. There was a bit of a dip, which I'm not entirely happy with. But having said that, it is redeeming itself with the earnings starting to bounce back nicely again. So there was a little bit of a dip. The share price kind of went sideways, but it's picking up again. So that jumps out. I don't like the fact it's negative and coming up. And share price has been falling a bit. I really want that to be well above 1. Okay. Great, earnings are coming up, but price is having a breather, so I might just wait for now. Same with this one, price falling, but earnings going up. This is a superb one to keep your eye on, because if you're seeing price falling but earnings going up, you can bet your bottom dollar at some point this price is going to come back up to reflect the earnings. And you'll see it time and time again, rising earnings, rising share price. Now this one here, although it's been going up in price, the earnings have started to turn the corner. See here? Less and less negative, so it's starting to pick up. But for the more conservative investor, you really want to wait for the earnings to break above 1, and then you want to make sure that the share price is going up in tandem. All right, and so if I come into here with the date line, we saw it here. Up go the earnings. Let's just clear all the lines just to make it a little bit cleaner. All right, so here the earnings started to turn around, started coming up. The share price started to come up. That's great. But then we've seen a sell down in the share price. So at that point there, you just need to be careful. Ideally, you want to find those share prices moving up in tandem with the earnings. All right, so here, earnings start picking up, share price starts going up. It is starting to roll over. So it's not an ideal candidate. All right, here, interesting. Look at this. Earnings have been going up for quite some time. Up and up go the earnings, but the share price hasn't taken off just yet. So I certainly wouldn't rush out and buy this just yet. I would wait to make sure that the share price goes up in tandem with the earnings. So this is giving me an early warning that the share price is due to kick off. For whatever reason, investors are not convinced just yet. Maybe they need to see more on the earnings side. Okay, so closing out of here, I'm going to go back to my stock view, and we found another one, Regis, REG. Right, put that one in. Right click, view the watch list average. Here we go. So what do we got now? Let's clear the lines, and here we are, freehand lines. Let's remove them. Yeah, superb. Right, so earnings are going up, share price going up. That's what you're looking for. I'll leave you with one last takeaway. You might be saying, well, what have been some of the best earning profiles out there? And one comes to mind. Let's put this one in. Pro Medicus, PME. So we saw some superb earnings profiles there in America, but you can have a look at Pro Medicus. Look at Pro Medicus. Look at its earnings profile. It has been absolute textbook. This big sell down here, when you look at it from an earnings perspective, you sort of scratch your head and you go, well, why? Why the big sell down when earnings kept moving up? And so if you just simply look sometimes just purely at the earnings and said, I'll look to buy shares and hang on to them just purely on the earnings, you've got to be careful because, of course, you need to check your share price as well. But when you look at it like this, at least from 214, you'd say, well, what do you think the share price most likely did? And well, certainly went up, $2 to over $300. And so that's the engine room. That is the engine room that will drive share prices higher. And so if you want to know that definition, right click in any given stock, view full stock analysis reports. Here it is. So I viewed full stock analysis report, and then in here I can scroll down and I can load up in the definition here, or click on it, or scroll down, and here we are. EPS stands for 12-month earnings per share. In this case, GNP has a forecast earnings of 18 cents per share. VectorVest determines this forecast from a combination of recent earnings performance and traditional fiscal and or calendar year earnings forecasts. That's the important part, forecasts. This earnings profile is not going to agree with your broker or your fund manager, or whoever it might be, because this is proprietary. We include historic, current, and forecasted earnings, and we stand by these. I believe that this is worth the VectorVest subscription price on its own, because if I can find companies where the earnings are rising, you can bet your bottom dollar you've got a very, very good chance, very high correlation. It's as simple as rising earnings, rising share prices. Now, there are one or two occasions where the earnings are rising and the share price is falling. Well, those particular companies I watch very closely, because at some point the earnings can only keep rising for so long before the share price will need to follow suit. And you can see this time and time again. Go and look at some of the best performing stocks in America. Go look at the Magnificent Seven, those 7 superstar type stocks. Go look at their earnings profiles and the share prices, and you'll see time and time again, rising earnings, rising share prices. All right, so I hope you got a lot out of this presentation. One thing I'd leave you with, if you're new to VectorVest or looking to take out a subscription, go and build yourself a watch list and go and put your shares in there. So, you create a new watch list. You might call it, say, my shares that I own, or whatever name you're going to give it. So let's say you created that, and then you'd go and put them in. You'd say put in Westpac Bank. Let's say you own Westpac, and you own some CBA, and you own some BHP, and maybe you own some Rio, and maybe you own some Woodside. So if you don't know the ticker code, it doesn't matter. Just put in the first couple of names for the company you're looking for. So if you, like Z for Zip. Oh, what's Zip? Oh, that's right. It's Zip.ax, and maybe I own some Pro Medicus. No, I don't know the ticker code. Pro. Oh, there it is. It's PME. Okay, so PME or whatever it might be. And so let's say this was your list of stocks, and then what you can do is you can come into here, and you can graph them, and you can look through and go, that's interesting. Zip's gone flat. And but my Pro Medicus earnings, yeah, they're going up, and share price is going up, and my Woodside, yeah, the earnings are falling. It's probably why the share price is not going too well. It's had falling earnings for quite some time. It's very, very obvious now. That guy Russell, yeah, he said, you should buy shares with rising earnings. And so, it really starts to jump out when you see this. And so we looked at BHP. You look at Rio. I mean, look at the earnings recently. Those earnings are really starting to fall away quite fast at the moment. And so that's why the share price is under so much pressure. Okay. Put your ones through. There's CBA. I've done a bit of other analysis on it. But, CBA, look, the earnings are going up. Here go the earnings. Up they go. So earnings are rising. Share price is rising. Okay, recently there's been a bit of a fall in the share price. You need to be careful. But you can see why, on average, CBA has been going up. It's been going up because earnings turned the corner. They turned the corner here. Prior to that, the earnings were falling. Share price kind of went flat. Turned the corner. Woof, up it goes. It's just like an explosion. Woof, woof, up. The earnings shoot up, and the share price goes up. And there you go. So, and Westpac, it shot up, the earnings taking off, but in recent times here, you'll see that the earnings here just starting to sort of just fall a bit, and share price might come under pressure. Okay. And so what I'll do here, I'll just recalibrate this because I want to get the average watch list line. So if these were the stocks I owned, I could look at the watch list average, and I'd look at this and go, I need to be careful. Yes, I've got some superb stocks like Pro Medicus that are helping me at the moment, but, it's telling me something here, right? It's saying be careful that the earnings are under pressure, yet the price of my stocks at the moment are going up. And so, when I get something like this, it's a divergence. Earnings are falling, share price is going up, and tells me to be careful. Because sure as day, the longer these earnings fall, eventually those share prices will start falling. So I certainly don't want that situation. Okay, so there you go. Hope you got a lot out of it. I'll leave the top 5, or what was it? Yeah, we found 5, didn't we? The top 5 we narrowed down to. I'm not saying that these are the best, but they certainly jump out. And put your ones in to VectorVest. How are your stocks currently stacking up? Hope you got a lot out of this. Until next time, bye for now.